Yo, what's up everyone? This is the result of the strategy that me and everyone in my circle uses, and this is the simplest and best strategy to grow a small account or pass funded evaluations. And this strategy works across every single asset because it's not based on any indicator, but actual order flow, volume, and institutional footprints. So now let's straight away jump into the strategy, firstly in my charts. Alright, now let's go on to a clear chart. Alright, let me turn on the noise. Alright, so this strategy is pretty simple. It got only 3 simple steps. Alright, because the simpler your strategy, the more results it offers. Alright, because it needs to be repeatable in the long run. Alright, so the first step is find out clear draws on liquidity. Alright, now what I mean by finding out clear draws on liquidity is pretty simple. Like this is a clear high, so this is a clear draw on liquidity. This is a clear high, so this is a draw on liquidity. This is a clear low, so this is a clear draw on liquidity. Alright, basically clear highs and clear lows out there. Now the second step is wait for a liquidity sweep. Alright, now what I mean by liquidity sweep is pretty simple, which just happened on the chart. So this is the high. Alright, now the price comes to that high, sweeps it, and comes back down. Alright, so now that is the sweep of liquidity. Alright, now moving on to the third step, which is also pretty simple, a reclaim plus a market structure shift. Alright, so what do you mean by a liquidity sweep then a reclaim and a market structure shift is pretty simple. Alright, so this is a clear high, right? So let's just mark it out. Alright, now what happens is that the price sweeps it, alright, and then reclaims the level. Now after the reclaim, we are looking for a structure shift, right? Which means that first we were in an uptrend in the candular form, making consistent higher highs and higher lows, and now we want to see a shift breaking the higher low or a lower high, depending upon the situation, creating that market structure shift for the entry confirmation. Don't worry, it sounds pretty complicated right now, I'm sure, but it's gonna get way simpler as we dive more into the video and to my special tool. Now, let's talk about the tool. There you go. Alright, this is the tool, and now this is the tool. Alright, so firstly, you need to identify the trend of the price. Alright, basically the best time frames that you should be using is 4-hour, 1 day, and 1 week time frame. Alright, because these high time frames hold a lot of conviction and confidence and confluence on the levels. Alright, these lower time frames don't work that well because the institutions and bigger players do not zoom into the lower time frames. Alright, so now what we're gonna do is that we first wanna identify the trend. 2, understand whether we want to be bullish or bearish, which means we want to long or short the market. Now in this case, we see that 2 time frames are bearish and 1 time frame is bullish. So we are morally bearish, which simply means that we are interested into shorting the price. Alright, now one thing is clear, that we're only going to short. Now, as I was talking about clear draws on liquidity, now as you see that this is an A liquidity level. Alright, so which simply means that it's a good draw on liquidity. Now you have to wait for a liquidity sweep. Alright, and then after the sweep you have to wait a 15-minute market structure shift. Right now you're on the 1 hour time frame, so your entry would be somewhere around here. This would be your stop loss, and I would, this is not an A plus level, this is just an A liquidity level, so I would aim for a 1-to-1, and then, place my stop loss at break even. So according to me, if you know how to trade, you know how the markets move, this would be a break even to slight profit trade. Alright, now let's move on to the other trade. Alright, so as you do see that this is an A plus liquidity level. Alright, so now when this A plus liquidity level gets swept and then reclaim, and then the structure shifts on the 15-minute time frame, you must have gotten your entry somewhere around here, and in this case I will place my stop loss around here. Not that big stop loss, alright? How big is it? It's just 1.6. Alright, so now as this is an A plus liquidity trade, my first target would be these liquidity, or basically these highs, or could be these highs as well, as this is an A plus liquidity level. And then my TP2 would be around this A liquidity level, right? because we are capturing right at the bottom, and this was 1 to 7, which simply means if you risked $1 on the trade, you'd be up $7. If you risked $1,000, you'd be up $7,000. All right, so now let's see another trade. All right, so this is an A liquidity level. All right, so here was the market structure shift. You would enter somewhere around here, keeping your stops above the high, and then you would simply aim for maybe a 1 to 1. All right, and then you would hold a trade on the no cost, and then you could book around this level. When you see the market ranging and showing that it's going to reverse, you could have booked the rest of the profit around here, I would say. Right, so yeah, it's a fine trade, a 1 to 1.5 or 1 to 1.2 or something like that. All right, so that's pretty much about the strategy. But now before that, you need to understand that why does this strategy work so damn well. All right, now just imagine that this level is an A plus liquidity for the sell side. Basically, it's a resistance. All right, somewhat the price action look like this. All right, now why is this a high probability that when the price approaches this level back up, it's gonna fall from here? Because the price went down from here. And how does the price go down? When there are a lot of people who have shorted the market. All right, and now people who have shorted the market, they also have a stop loss or a liquidation price. All right, where their trade will get stopped out and liquidity get hunted, or they might get liquidated. So their stop losses would be around this particular zone. All right, so now this whole zone is a strong zone, a high conviction zone, and when the price approaches this zone, sweeps it and reclaims it, and then a structure shift as an entry trigger, and you could enter right here, targeting all these lows one by one by one. Now this was the logic behind this trade. And now if you're not a basic trader, an advanced trader, then you can also use one more thing. All right, so now this tool is really good, but no one talks about it on YouTube. All right, it is fixed range volume profile inside the trading view, which you can find it out around here. All right, the fixed range volume profile. All right, now what you want to do is that you have these ranges, right? You want to apply it on a bigger time frame. All right, now you are getting three levels. The highest one is the value area high, the between one is point of control, the strongest level, and the below one is the value area low. Now how we can use this into consideration? To make it pretty simple here, I don't want to overcomplicate it. These levels simply act as supports and resistances. Now what we want to do is that we simply want to align these levels with the A and A plus liquidity levels to make them even high probability. All right, I'm not getting into why these levels work so well right now and what's the logic behind it, because I don't want to make the video too long. And yeah, so now if these lines of the fixed range volume profile, value area low, value area high, and point of control are aligning onto that A liquidity or A plus liquidity level, you have to understand that that's the greatest level. Like I do see that this A liquidity is near the value area low. So this simply means that if the price dives into here, it reclaims and a structure shift, it's a very high probability trade, right? I can risk slightly more. And then I understand another thing, all right, that this is a clear drawn liquidity, plus we have the value area high here. So if the price comes right here, sweeps this liquidity and then a structure shift, this is a very high probability trade because we also have the value area high plus the A liquidity level. All right, and you can do one thing, that on A plus liquidity levels you can hold the trades for a bit longer, and on regular A liquidity levels you can hold trades for less amount of time. All right, the A plus are better levels and A are regular levels. All right, so and instant access to my indicator toolkit, strategy playbook, and more valuable stuff, and fixed range volume profile settings, everything has been updated inside of the comment. And yeah, that's it for this video. Stay blessed, become the best version of yourself, and if I can do it, you can too. Peace out.